What is going on, guys? It is Rags to Riches. I'm back with another episode, and we have more access to private companies. Super exciting. You guys may not be aware, but there is this rolling wave of new closed-end funds that are coming out into the public market for individuals to invest in early stage private equity, venture capital, and alternative assets. And let me tell you this, the reason why I care and the reason why I'm telling about you this information right now is because these are some of the most innovative financial products that are available for mass consumers to buy as of today. I can go into a long tangent as to why I care about these types of asset classes, especially in relation to the average individual investor, but one came to mind which is going to be publicly listed super soon. Now, some of you may have heard of the platform called Fundrise. Fundrise came out about in the 2010s to provide access to REITs, electronic REITs. And essentially what they did was they had, in a very consumer-friendly way, low cost and a low fee way, to give people access to buy private real estate. They later expanded that to encompass private credit on the commercial real estate space. And for anyone who doesn't know, private credit is just privately held and syndicated loans by corporations as opposed to banks, typically within the middle market software space as of most funds, but it can range from a number of different business types and asset classes. Recently, Fundrise decided to create a venture capital fund where, rather than investing in real estate or debt, they instead invested in equity of early stage companies. That fund came out in 2022. It was labeled the Innovation Fund, and it got really big. So, what have they recently promoted to the world? They are going to be converting what is known as a closed-end interval fund into a closed-end fund. Basically, what that means is, instead of you needing to buy their fund on their platform and only having liquidity on a quarterly, semi-annual, or annual basis, they're going to be listing the fund public. A closed-end fund, you can think of it very similar to a company's IPO, where rather than buying a company like Apple, where you're going to be an equity owner in a business, you instead would be an equity owner within a portion of a broader pool of assets. And what makes this closed-end fund really unique compared to many others is that the underlying assets in the fund are some of the biggest, hottest, and most important companies that have been out there in the past couple years. For everyone that's like, how do I buy OpenAI? How do I buy Anthropic? How do I buy Beast Industries? This is how. So let's get into it with my long intro. The public ticker for private tech. VCX intends to be a New York Stock Exchange listed public venture fund that gives you access to top private tech companies from AI to space exploration in a single investment. I'm actually curious to see about this video, so let's watch.
It was the stock market that started history's greatest wave of wealth creation. From factory workers in Detroit to farmers in Omaha, anyone could own a piece of the great American companies. But today, our most innovative companies are staying private longer, which means everyday Americans are missing out. Until now. Introducing VCX, the public ticker for private tech.
Well, you heard it there. The main thesis of the fund is that one of the more recent trends that's been available is that private companies have been staying private for longer, and the growth of those really innovative businesses has been, candidly, limited in the access of the ultra high net worth and high net worth investor alongside institutions. The reason for this is there's ample capital within private markets to fund business operations, growth, and expansion. That's the rise of private equity and private credit that we've seen in the past 15 years for private equity when it became really, really big. In the past 5 years for private credit. What VCX is trying to do is to broaden the scope to democratize the access for these types of asset classes to everyone else, which I think is pretty cool. Giving you a bit of a detail about how the fund is supposed to be presenting itself, and now to get into some of the details about the fund itself. So the idea with VCX is that it's designed to deliver long-term growth from a diversified portfolio of tech companies. Now, the fund is focused on investing in potentially high growth private tech businesses where it's going to be taking a multi stage approach. So instead of just investing in very early stage, seed stage companies or Series B or C or D or whatever it might be, they're going to be investing in tech companies that are across the life cycle of development prior to being entered into the public markets. This would involve investing in thematic sectors including artificial intelligence, machine learning, data infrastructure, vertical and horizontal software, alongside other capitals and categories that have the potential for long-term growth. They're planning to be listed on the New York Stock Exchange very soon. Their advisor is Fundrise Advisors. Essentially, they're self-managed. It was incepted in July of 2022, and as of today, it has a net asset value. We'll break down what that means in a minute, of $542 million. Now, you may be looking here on this line, annual management fee of 1.85%. And you might be asking yourself, well, why would I invest in a fund with a fee this high compared to the S&P 500 managed by Vanguard or Fidelity or any other provider with an index fund fee of whatever it might be, 10 bips, 5 bips, 3 bips? The reason being is it's very similar structure to how other private equity vehicles are run. So when you traditionally invest in private equity, there's going to be a 2-and-20 fund structure, meaning you invest $1 million, they charge you 2% annually. That's the fee for marketing, operations, salary to make sure that the fund is operational. And then they'll charge you 20% of the profit that you receive on the investments, if there is a profit, provided that it meets a certain threshold rank. To go through an example, let's say they want to target at least performance of the S&P 500, and the S&P 500 returns 10% in a given year, but the fund returns 20%. Well, out of your 10% of returns, in addition to the 10% threshold that they agreed to provide you in your subscription agreement, they're going to take 2% of all your gains. This fund doesn't have that. Instead, they're actually offering a lower fee than most private equity investments with daily liquidity. You can buy and sell it on any day when it IPOs, and you get to keep all the profit if there are some. I think it's kind of cool. Now, the reason why I am personally excited about this fund is because of the portfolio assets. You can see some pretty big names here: Anthropic, Databricks, OpenAI, Anduril, Ramp, SpaceX. Everyone wants to buy SpaceX. Oh my God. Epic Games, Flock Safety, DBT, and Vanta. These are all some of the biggest hitters in private equity that are going to be likely going public this year. Anthropic is beginning conversations about it. We all know OpenAI has run out of cash and they need to go public. Ramp is another one which is scaling up really quickly. Elon Musk is looking to IPO literally within the next 1 to 6 months. And then these other companies are a little bit earlier stage. And in addition, there are some other holdings as well. How Fundrise, throughout the time that I've been monitoring this fund, is kind of manage the investments is they invest in middle to late stage private equity companies where there is that chance for profit and runway and additional growth. Once the companies will IPO, they'll typically hold them for a 6-month period as required to by regulation. When a fund goes public and you are a pre-IPO shareholder, they'll liquidate the position, cash it in, and then cycle into the next investment. Sector breakdown, I think, is pretty interesting. So it is very tech heavy as outlined within their prospectus and other marketing materials. Artificial intelligence does make up 43.8%. So if you were looking for a direct play for AI, this is how you would want to do it. They have 22.9% into data infrastructure, 5.2% in fintech, 5% in aerospace, and some additional sectors as well. So if you're looking for this fund to be a sole diversifier away from your S&P 500 or NASDAQ exposure, not the play. What it may be the play for, depending on your risk tolerance goals and objectives, is to get you access to private markets. And these are some of the hottest names that are out there. Now, performance. Literally the only thing that matters, especially with an investment. The past 3 months has returned 21.21%. Year to date, it is up 13.43%. 1 year, it is up 63.27%. And since inception, it is up 84.44%. Clearly, and I say this repeatedly on every video and every time I ever make a YouTube video, past performance does not indicate future returns, because the past is not the future, although there are themes that may recur in the future. With that being said, large tech-driven private equity companies have historically performed very well. Manager selection is very important when deciding to dabble within the dark arts of the private markets, and they've done pretty well for themselves, and I'm really curious to see how this progresses over time, especially in light of some of these IPOs that are going to be coming out soon and where they may deploy those proceeds post the 6-month holding period. Now, to quantify that, because that's just numbers on a screen, what would that actually entail for an investor that has bought an interest in the fund and then held it throughout the time of inception? Well, if you put in 10 grand, you would have got distributions of $225. Okay, nice. But then you would have got $9,000 of additional appreciation. You basically doubled your money in 4 years. Nice. Now, there's like a bunch of materials on this. They have their YouTube video, they have their investor day on this website, which I'll include as a link in the description. There's a whole bunch of materials. Please, for the love of Christ, read the prospectus or at least throw it into an AI model. So one, you could also make it so some of the holdings get some additional revenue. Thanks, guys. But two, so you can actually understand the risk and returns and the rationale for investing in an asset like this. Big picture, I like Fundrise. I like the venture fund. I will be buying VCX upon IPO. I do expect volatility, but that's just my personal perspective on the matter. If you are an individual investor looking for private market alternatives, there are literally very few options. I can think of 3, actually. Destiny Tech 100, which I made a video on before. Please look at my YouTube channel if you want information about that. It is currently performing at 2 times above net asset value, basically, if you look at the value of all the assets in the underlying fund. That was the first to market with a fund like this, and it has worse assets than Fundrise. We have Robinhood's venture fund that just came out last week. It got smoked because they decided to IPO when the Middle East was getting blown up. Who would have thought Vlad had bad ideas? Duh. Now, Fundrise. Better assets, lower fees, more transparency, longer track record for dabbling in the dark arts of private markets, and I think they're going to do a really good job with this launch. So what I'd recommend you do is to 1, speak with your financial advisor. 2, think about how you're thinking about getting deployed into private markets, and if you even want to in general. 3, really think long-term about your risk and return objectives. If you have $20 million and you can live off of a T-bill ladder, do that. But if you want exposure to private market assets and some of the hottest names that are out there, and you're thinking about getting invested, I would definitely look into the venture fund by Fundrise. Now, if you don't know who I am, I'm Rags to Riches. I make YouTube videos whenever the hell I want to. But if you did have any questions, feel free to reach out to me on YouTube. I am very active on X shit posting, and I hope you all have a great rest of the weekend. Peace out. Bye.